Most economists believe that we would not see further monetary policy tightening, and actually that's what happened. The majority decision within the MPC was to raise the rates by 50 basis points. Your view?
Okay, I think we are still all recovering from that shock because on the average, we would have expected that with the moderation in inflation rates, maybe rates will have been left where they were and actually begin to see a decline as we go along to be able to boost the economy. But I think the governor went to a lot of length to explain to us why there was that kind of movement, because in economic terms, there is always a lag period between when the fiscal policy changes that is being contemplated will begin to have effect on the financial system. And I think a 2 to 3 months lag period is not unusual. So I think a 5% increase may not be very unusual in this kind of circumstance. However, the one that, However, the one that is a bit shocking to most observers is the cash reserve ratio being moved all the way by 100%. And one would have expected that maybe a 50% movement at all will have been able to serve the purpose at this point in time.
We'll talk about those issues in a second. Abdulrahman, you talk about the lag period, and I think many economists have really questioned whether the previous increase of 1 percentage point did actually have a pervasive impact on the economy. Obviously, there were a lot of issues in between, heavy fiscal spending, the elections, all sorts of other things in the interim, but there is a sense that it's taking too long for some of these decisions to really have a direct impact on the economy of Nigeria.
Well, you may be very correct on that because there is actually a challenge because of the gap between the monetary supply and the monetary values in the system. Within the banking system, you don't have enough traction in terms of how much passes through the banking system in the Nigerian economy, which is probably why the central bank has taken a lot of steps to see how we can modernize that banking system so that you have a lot more transaction going through the banking system. And if that happens, then the effect you're talking about will be a lot more rapid and the lag period will be a lot shorter. So I agree with you that the anticipated effect of the 1% increase the last time around has not been fully felt in the system simply because too much money is still outside of the banking system. And therefore, whatever the central bank does in terms of moving rates up and down, it may not have that kind of effect that is desired in the short run.
All right, obviously what's also foremost for the CBN is the stability of the Naira, and the decision taken at the last MPC had a lot to do with trying to retain some kind of foreign exchange stability, especially with regards to the Nigerian currency. What do you make of the comments that have just been made about the need to continue to stabilize the Naira against imported inflation? We all know that inflation for April, somewhere in the region of 11.6%, 11.3%, but it's not supporting the currency.
Okay, I think the good starting point is that inflation itself, if you look at it year on year, has moderated. And I think that is a very good news for the Nigerian economy, because if you look at economies across the world, there's a lot of struggle right now to deal with inflation. Because if you look at the economy of, say, the US or the UK, between March and April, they've actually worsened in terms of inflation rates. So if we're able to record some positive inflation movement, then that is good news for a start. Secondly, Nigeria is still significantly an import-dependent economy. So to use exchange rates without noting that any depreciation you have in that currency will simply translate into inflation is to be myopic, at the very best. But to be very realistic, you must continue to watch the value of the Naira vis-a-vis our foreign reserves and vis-a-vis the inflation rate, and try and hit some kind of equilibrium, which is an unusual request for this kind of economy, because anywhere else in the world, as soon as you see that you cannot support your currency, you simply depreciate it, and the local economy is supposed to rise up to the occasion and make sure that imports are more expensive, and therefore equilibrium is reestablished. But in Nigeria, if you attempt that, you are actually going to have what is called a runaway inflation, because the very fact that you actually depreciate the currency will make prices of every other commodity, including agricultural commodities, surprisingly, to actually go up. So you don't want to begin to release inflation in that kind of direction.
Abdulrahman, a vote of 9-1 in favor of raising the cash reserve from 2% to 4%. Do you have something to say about that?
Yes, I'm very surprised, and I'm sure the whole market is right now very still trying to recover from that shock. Like I said at the beginning, 100% increase in cash reserve requirement, and for it to be 100%, I mean, almost 100% supported, almost like a unanimous vote, sounds that there may be some statistics that is not available to the public, which the committee had access to. And of course, having come just right after election, I may not be surprised, to be a case of, trying to see whatever electioneering spending that has happened. Maybe this is the time to try and mop it up and see how we can get back the economy on a more moderate levels.
Talking about the economy, the governor did throw out a few statistics by way of real GDP growth being 7.4% in the first quarter, which was higher than the corresponding period in 2010. Overall growth in 2011 forecast to be 7.9% in Nigeria. What's going to drive that growth? Because we hear that the non-oil sector is starting to really have a significant impact.
Well, I mean, the Nigerian economy, as you know, is still significantly agricultural based. If you look at the basket of commodities, that we actually use to do all of this measurement. And of course, the oil price is still significantly above the $100 mark as we speak. So we do believe that no matter the drop in terms of the growth of the non-oil sector, that is still going to be enough to take us to maybe even around 8%, according to my own estimate.
And finally, Abdulrahman, he did refer to the fact that what we saw with the last rate hike was a corresponding rise in interbank rates. And those kinds of issues have really impacted on liquidity in the markets and the ability of banks to lend to one another. As we try to stimulate lending within the real economy, what's this latest decision going to do by really getting some kind of impetus within the banking system for further lending?
Well, I think banking transactions and transactions among banks, is a function of actual demand and supply within that market. And to the extent that a lot of liquidity has already been injected into the system, I think it should not have too much of a negative impact. You will recall that there is a lot of money released by AMCON in terms of bills that have been released for non-performing loans in some troubled banks as well as even the regular banks. And we've gone through 1 or 2 tranches already, and more may actually be on the line. Now, even if these bills are not being discounted, because the rule is that you can only discount 25% in the first year, 25% in the second year, and then the remaining 50% in the third year. But at least during the entire period, you can still go ahead and use them as pledged and do collateralized lending, which actually will bring the rate down to somewhere close to where treasury bills are, which is for now maybe around 5 to 6%. But if you do it on a clean basis, and I expect that you may be crossing the 8%, maybe up to 8.5 or 9%. And in any case, there is still a guarantee of the central bank on the table, which guarantees all transactions in the interbank, and therefore we don't expect any hike to happen. I expect that by September, when the guarantee is supposed to be lifted, or when it's likely to be lifted, then the real effect in terms of how these rates will affect the market will then begin to come to the fore.
Abdulrahman, a final question, and not really something that the MPCs had to decide on, but obviously something that Nigerians are talking about, is this issue of becoming a cashless society and the whole project of fining people who make bank transactions in cash beyond 150,000 naira going forward and 1 million naira for corporates. Why is this such a hot potato?
Well, I think it is a very straightforward issue. I listened to the central bank governor, and it was very clear that at this point in time, we're actually trying to see how to modernize the economy. And if you want to modernize the economy, yes, there are some practices in the past that we have to just put behind us. I mean, carrying cash in huge proportion is actually not very healthy, even from a security point of view, as well as from a management point of view. And it gave statistics of up to 200 or so billions of naira being used every year, either to produce currencies, to manage the currencies, including even destroying the currencies. So, I mean, these are not things that we want to do too much into the future. And by the way, the statistics the central bank gave alluding to the fact that only about 8% of withdrawals are actually above the 150,000 naira bracket, which shows that more than 92% of overall transaction in the economy is less than 150,000. So me and you and everybody else in the economy should actually be comfortable with the 150,000 naira in terms of individuals. And the remaining 8% people who happen to be moving more than 150,000 naira per transaction, then are the ones who are going to worry. And by the way, he has said that he's not even saying people should not do more than 150,000. He simply says, if you need to do more than 150,000, you pay a price. And these are economic decisions. So if you think it is worth your trouble, then you go ahead and pay the price. Now, whether the price is going to be 1% or 2%, I think you can build that into your cost of transaction and make up your mind whether it is worth the trouble or not. And if it is, please, then go ahead. And if it is not, then you don't. And for me, really, you talked about lag in the implementation policy of central bank decisions. To the extent that you have too much money out of banking system, that lag will continue to be there and will be long. But as soon as you can have up to 80–90% of our money within the banking system, then you can be sure that monetary policy can begin to have instant effect.